Good morning, traders. It is Monday, September 30th. Taking a look at the charts, we've got the SP 500 daily chart, and overall, the market recovered back at the end of the day on Friday. We've had a nice move up. It has been consolidating in a somewhat controlled manner. It's testing the 50-day moving average, which is this blue moving average line here. And more or less, it's had a little bit of a bounce, and it came back down, and it is trying to recover. It needs to really get back above this level here very quickly, or it is going to start a potential breakdown, and we could see another big collapse down towards that 200-day moving average. So overall, if we take a look over at this is the risk on. If we take a look at the risk off, like bonds. Bonds have been holding up. They're holding in a formation stuck at the moving averages. Technically, they are still in a downtrend. You can see they've, if we just move over a little bit, you can see they were at green. They got oversold, went into orange, and now they're in a red. And the big question is if the stock market rallies, we are going to see the safe havens bonds sell off and go back down. And that's the big question this week is which way are equities going to go? And at this point, we did get out of our SSO position on Friday. If you do still hold SSO, a lot of you trade end of day, meaning you execute the following session. If you still hold SSO, the price will be still above our stop price at the open. You can continue to hold that if you like until the market closes below that stop, and I can continue to update that play as it unfolds. But technically, our system, we did send out a close the position on Friday. Those of you still in it, though, there's still a chance here the market could recover and continue to go higher. So I would recommend holding that position until we get a close below the stop on that ETF. Taking a look over at metals, we're seeing gold start to break down today. It's really testing some new lows. Had some pretty good volume in pre-market trading. There's this potential topping formation here that looks like a head and shoulders formation. We had this bearish flag. It's starting to break down. This is the neckline on here. And a break of the neckline usually goes from the top of the head to the neckline. That distance is where you could see the downside move, and that would come right into all these previous candle highs over here. So there is potential for gold to flush down. And if we take a look over at silver, it is down 2% this morning. If we throw a Fibonacci extension, we can get an idea of the downside momentum here. We've got the high down to this low, back up to this high. We carry it forward. There is potential here for silver to continue to sell down. So we had this sell off, we had the rebound, and now we're at the 618. We had a bounce, and there's a very high probability we see this flush down and test this lower level to 1651 or 1650 on the chart, which if we drag across here is the next kind of consolidation area that we had. Right now we've got another consolidation right through here. And that's where the market is kind of sitting on. So we'll see if we get this continued flush down, and it could end up giving us a great bottoming formation to get long for a much larger leg to the upside later in time. Now we've seen a huge run in silver, and a nice A, B, C correction is very bullish for price action. We did get out of metals when they were trading up higher. We're outperforming the metals market this year, the miners, by getting in and out of various ETFs, whichever one has the lowest risk. We move in and out of those, and now we're letting the market consolidate and do its thing. There's no point in holding these big drawdowns, or might as well let the market do its thing and look to re-enter in this new bull market when these corrections have more or less dissipated. Looking over at let's pull up the dollar real quick. The dollar continues to push higher, and today we're seeing the US dollar really pop and move higher again. It's taking that run to that $100 mark we've been talking about for months, for the last year more or less. We're looking for that $100 mark on the US dollar, not on the UUP ETF that we're on here, but the US dollar index itself. And the US dollar index right now is trading at 99.11, so it is getting close to hitting a major resistance level, at which point when the dollar does hit that level, we could see a big pullback, and that's when metals could really start to take off in the next week or two or three, whenever the markets start to unfold in that way. Now looking over at energies, natural gas continues to flush down. It is really in free fall mode, really unwinding. I think it's a big heat wave going through the southern United States. Tons of heat, meaning in the states, meaning there's not going to be a lot of demand for natural gas. We're really seeing this pull back. Now, there is the big talk, the Farmer's Almanac, about a very cold winter, long cold winter. So I think we're getting into a point here. We're down into these pivot highs, this pivot low. We're getting deep into an oversold support level. And if we throw a Fibonacci extension, we can get an idea of this momentum. We've got pullback. We have more or less have hit that 100% Fibonacci as of more or less this morning. It's this 3702. We talked about this exact level last Friday. I think it was Friday or Thursday. We're coming down and we're getting oversold now. We've overshot the target. We're coming down to the 50-day. We're coming into some key pivot areas in the market that if you just look at this price action through here, it's a very significant area. Pivot low, we had a breakout, we had some pivot highs, we had a breakout and a pivot high, a bunch of pivot lows here. So we're coming to a very significant level. We might start to see a reversal here in natural gas, and this could be a very big leg to the upside. We got a huge move up, very quick and sharp momentum move back to the downside. And if this plays out, we could see a very strong rally going into the winter again. Looking over at crude, down 1.5%, continues to have a nice bear flag formation. It is forming like another type of bear flag here. If we look at this price action, you got the sell-off, you've got the bear flag, came down for the second half of that move. And in short, there's a mini bear flag in here, a bear flag to the downside. And here, if this breaks down, we're going to go back down to this 54 mark, which would be this bear flag distance here. So overall, crude still in a bearish trend, huge gap up on news, and that news-based move has faded out. And I'm not a big fan of the crude oil chart here for getting into any real trades. Short term, still negative. It is getting to the lower end of the range here, where it could find support at any point, but more or less very choppy chart, not one that I'm looking to trade at the moment. Last but not least, a quick look at the Bitcoin futures here. Overall, they have broken down out of this big pennant formation, and it's doing what looks to be a running correction, meaning lower prices likely to continue. We got to move down. Instead of it flagging and trading in a bear flag for the second leg down, what it's doing is it's doing a running correction, be underneath the 5-day moving average. We got to move down, and it's consolidating in a downward momentum move here, and we could very easily see the second half of that momentum move really pick up speed and break down at any point. Overall, this was the pattern here. That was the breakout of this apex. Whichever way it was going to go was going to have a very strong move. Of course, a 1-day move, it does that big drop. Very tough to trade unless you've got orders set in place to try and pick it up on a break of the trend line, or a break of this low, or a break of this low, or a break of this low. And those layered in lows very close to each other, when one is broken, it triggers more sell orders, and then it triggers the next one, and it creates that big sharp wave. And it is tough to trade unless you put orders in place, and you hate to catch something that's 5, 6, 7, 8% or more move against in the market and try and jump on board, because it's a pretty big move. But Bitcoin does have these huge 10 to 20 point swings sometimes, and very tough to trade without taking on a lot of risk. Anyways, that's it for this morning, and I'll talk to you in a little bit. Bye-bye.